I do think it's a little bit of a sugar high. We see every time that China and the U.S. agree to go back to the negotiating table, the markets do rally, and we won't really know anything concrete for a while. So while it's nice to enjoy the pop that we're seeing today across the Asian markets, the long-term sustainability is still a question out there that we'll need to see play out longer term.
What's your strategy then for the Asian markets? I know that you say the short-term outlook is choppy, and that's what we've really seen over the last little while. How do you trade that then?
We still really like Asian equity markets. We see the valuations as very compelling. We see, moderate growth, but, pretty good returns. The issue is there's a lot of different outcomes, right? Like there's a lot of uncertainty, and so you have to be very careful about what you own, how you're positioned. So we do really like Asian equities compared to equities in the U.S. For example. The valuations look far better. 1.6 times price to book is pretty cheap. China as well as 15-year lows, whether that's in the MSCI China, the 8 shares, or in the A shares onshore. So we still really do like China. We do think that the China growth story, while it has slowed, is still very much still in play, and days like today, the portfolios are really benefiting.
Okay, Dan has a question.
Hey there, Sarah. Great to get you on today. You say that Asia ex-Japan looks compelling on a price-to-book perspective relative to the United States or other international equity markets. What are you advising clients in this current climate, though? Because while we do see positive headlines today on the trade front, this trade war seems to be going nowhere anytime soon and is unlikely to be resolved in the short term, right?
Yeah, we have taken some risk off the table. To be very clear, our multi-asset team at Eastspring is taking risk in areas like emerging markets FX and also in Asian high yield. So we're seeing good yields, but we also want to be careful about what we own. We are neutral on equities. Within that, we are overweight the U.S. because that's where we still see the strongest sort of macroeconomic support for equities. And we're trying to balance the portfolio for all of these different outcomes and trying to take risk where we think the upside is really there. And given what's been happening in the market with all the volatility, we've been pretty active in changing our allocations and responding to what's going on in the market and trying to stay ahead of what's happening for our clients.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.